Well, I think at this point it's really In Madrid, and you're going to see probably a few swings this morning, although it does look like the trend is to the downside, at least of the couple that we've got open here. The CAC 40 coming out down 0.2% as well, and we're still waiting on the DAX, the AEX, the FTSE MIB, but you'll likely see some red arrows there this morning as we open up to the downside across Europe. Anna?
Yeah, both results and expectations evident in some of the early movers this morning then, Matt. We got Philips up by more than 2% on results, AstraZeneca up by more than 4% on high hopes for what they will have to tell us about the Oxford vaccine. Now, European markets opening slightly to the downside then. That's as virus cases in the US and Hong Kong are on the rise. But here in Europe, the focus is on ongoing talks for the EU Recovery Fund. After 3 days of squabbling, Bloomberg has learned that leaders are near to a deal. The Frugal Four has laid down their acceptable level for grants, 390 billion euros, just 10 billion euros away from the offer made by the European Council President Charles Michel. Talks will return for a 4th day this afternoon. Joining us now is Ludovic Subran, an Allianz chief economist, Allianz Global Investors chief economist. Ludovic, great to speak to you. So it seems as if in Brussels we're closer to the landing zone. It's a range of just 10 billion euros that seems to separate the two sides in terms of these grants. From an economist perspective, how crucial is it that we get some sort of bailout or recovery fund deal today?
I think it is very important because, the coronavirus is still on. And so we will need more budgetary resources to make sure we fight this coronavirus. So if we don't get a deal, the ball is kicked back into Frankfurt's camp for Christine Lagarde to do more on the ECB side. And they actually last week decided to go on early break on holidays. They didn't announce much. So this deal is important. It shows solidarity. It will certainly, give a bit more flesh to the bones of what Europe is exhibiting right now, which is the image of a continent that is managing the pandemic. And for some countries that are particularly hit, especially Italy, but also Spain, and to a certain extent, France and maybe Belgium, this money is important for the stimuli that they have announced or they will announce. So this is important that we get it through.
We do see investors confident in Italy right now, buying the bonds, pushing the Ludovic. I mean, isn't a debt crisis still a very real possibility in Europe?
I mean, I think, we've shown since the beginning that Europe is much more, prepared and much better at handling a crisis than in 2008, 2009. So I'm not concerned about debt right now. I'm concerned about debt 2 years from now. Because now, okay, we have this drama in 5 acts and, we're going to negotiate something. It's very important we do so. But the most important is going to be disbursing fast, making a difference when it comes to growth, and making sure that in the medium run, we lessen the burden of debt to GDP. And this is something that, only a good deal with right priorities will actually achieve. for now, I'm not concerned about that. I'm more concerned, again, in 2 years, what's going to be happening on the non-performing loans on the private banking system in Europe? What's going to be happening on some of these countries if they actually have zero growth in 2 years from now? That's the concern. But right now, the issue is to get the money out.
Yes, and Ludovic, one of my guests last week was saying that, yes, the issue is to get the money out, and that even if we do see a deal, we might see conditionality attached, which means that some of the money is not distributed immediately. Maybe it takes years for some of the money to arrive. Is that the kind of detail that might water down the market impact of this deal?
Yeah, I think what is interesting is that, the fourth day is just started today, and we see that we are not far. In magnitude, we were not very far from what was expected from the French-German proposal. The big issue is governance. The big issue is indeed some of the countries, negotiating rebates, some of the countries actually being concerned about tying the aid to the rule of law. So you see here the frugals and the Central European bloc. So this is a big issue, because if, or the veto that was proposed by Mark Rutte yesterday, these are concerns, because if we don't get the disbursement track faster than usual money, then this will be all for nothing. So the magnitude and the size of the envelope is really one issue, and they've been negotiating at it for the past 3 days. But then they need to really make sure that this deal is about trust and not about rules, and that we make sure that we understand very quickly how this money can be dispersed. Otherwise, you can forget about the macroeconomic impact of this deal in the next 18 months, which is when we need it.
I wonder what you think about the ECB here, Ludovic. Do you expect them to act more strongly at all, or are they going to hold their course because of the fiscal help they're getting from the EU?
Well, I think the ECB has a few, details, parametric changes to make. They could tweak the TLTRO. They could actually agree to buy fallen angels. But the big issue, again, for us, last week, we expected the ECB to stand the course. The big issue for me are the non-performing loans on the banking system. We estimate them to be around 300 billion by the end of this crisis. And as you know, the ECB is not only about the ECB, but it's about the transmission of monetary policy. So my concern is that we forget that down the road, we're going to have an issue with banks. And we need to start thinking now about, the resolving mechanism we can put in place, be it a bad bank or be it, something innovative that we have to put in place to make sure we don't run into crunching the recovery down the road. This is very important to understand, that we need to be more proactive. Just look at this summit. Had we negotiated before, we won't be in this situation right now.
Let me ask you about how markets react to this then, Ludovic, because I know you've been doing a lot of work on the co-movement, the contagion risk from one asset class to another, Ludovic. And what is your main conclusion about similar assets with similar risk profiles, how they behave through this? Because it has seemed from one day to another that perhaps all assets, all in inverted commas, move together, but perhaps not.
Well, this is interesting, because I really believe that the euro is exhibiting something that we call the exorbitant privilege. Actually, we don't call it this way. It's a phrase that is coined by Valéry Giscard d'Estaing, then President of France. The idea is that during a crisis, everybody rallied to a currency, and the dollar is basically the proving point that this exists. And since the beginning of the crisis, be it by the action by policymakers, the ECB, the Commission, Finance, Europe and the euro area has exhibiting this type of, we actually play in the Premier League. We're not, a second zone currency area anymore. So that was very important for us. But we wanted to understand what happens when it came to asset classes. And indeed, what we see is that apart from the US Treasury bond, the other asset classes tend to explode in the tail risk when there is a crisis, meaning from the middle of March till the middle of April, there was no safe haven in the euro area. So our assumption, which was, the euro is much better now than it used to be, is actually proven wrong by this idea that there is no safe asset in Europe when you look at crisis times, which still means that we need a stronger ECB, which still means that we need to negotiate something stronger when it comes to the fiscal union. Otherwise, and this is going to be the scenario of a failed summit, would actually push spread up again in Italy. And this is something we want to avoid at all costs because of the financing costs, from this type of crisis.
All right, we're going to talk more about that with you, Ludovic, and also about what we could see happen over in the U.S. Ludovic Sobran, Allianz Global Investors chief economist, stays with us. Coming up, Los Angeles on the brink of another stay-at-home order as a Florida Democrat says the spread of the virus in that state is out of control. We'll discuss the impact on business and the economy next. This is Bloomberg.
Welcome back to the European Market Open. We're just 11 minutes into Europe's first trading session of the week. And we see cash equities in Europe down by 0.5%. The FTSE 100 down 0.7%. US equity futures do seem to be worsening as well. So as we make our way through this session, we do seem to be losing a little bit of momentum. And we have maybe dial back our expectations of early news from Brussels. The euro is at 114.44, so off earlier highs. AstraZeneca, definitely a focus for markets today. We saw the AstraZeneca share price rally solidly during the European session on Friday. Then the ADRs in the US also moved higher. And now, once again, we're up by 2.3%. We were up as much as more than 4% out of the gates this morning for AstraZeneca's share price, but now up by 2.4% on expectation of what they will have to tell us later on today about the tests taking place at the Jenner Institute at Oxford. Let's get a Bloomberg Business Flash, and for that, here's Laura Wright here in London.
Thanks, Anna. Dividends paid by UK companies could take 6 years to recover. That's according to a report from financial data firm Link Group. Payouts this year could shrink by nearly half to £56.7 billion. Over 200 companies either cancelled or cut dividends. That resulted in a far more drastic reduction than during the financial crisis. Marks & Spencer is set to announce job cuts this week. That's according to Sky News. It comes as the coronavirus pandemic continues to affect its business. Back in May, the company's chief executive said the pandemic has given M&S the opportunity to accelerate its turnaround. A spokesperson told Sky the company doesn't comment on speculation. Disney is slashing ad spending on Facebook. That's according to the Wall Street Journal. It's a blow for the social network, as Walt Disney is the #1 advertiser on its platform. It comes as a growing list of companies are halting spending. Many are criticizing Facebook's handling of hate speech and misleading content. No official response yet from Disney. That's your Bloomberg Business Flash. Anna, Matt.
Laura, thanks very much. Laura right there with your Bloomberg Business Flash. Now, in the U.S., talks on a new coronavirus stimulus package will start at the White House today. But before those talks even begin, the seeds of division have been sown. The Trump administration opposes a $25 billion virus testing package, as well as plans to allocate billions to disease prevention and control. Both are favored by other lawmakers. This comes as the virus outbreak worsens in key hotspots around the country. A Democratic lawmaker in Florida said the state was, quote, out of control. And on the Pacific Coast, the mayor of Los Angeles said he is considering imposing another stay-at-home order. Ludovic Subram, Allianz Global Investors chief economist, is still with us. And Ludovic, the situation in the U.S. looks pretty bad, certainly compared to here in Europe. Are you concerned about it worsening? Are you concerned about it getting out of control there as far as the spread?
Unfortunately, I'm not an epidemiologist, so it's not my place to say. But you know, the good news is that at least the deep pocket syndrome is really, you know, going full speed in the U.S. So that's the good news. That, you know, they discussing over 25 billion here or there, but they basically have put a lot of money into the fight against the pandemic, but also into stimulating the economy, which means that there is this major safety net that we're missing in Europe as we speak. No, on the pandemic, we are of course very concerned. We are very concerned about, you know, the new restrictions that could happen on the economy, and we are concerned, of course, about the number of contaminated people and the number of casualties. The big issue now for us is to see what's going to happen in the next you know, couple of months, because of, you know, what will firm do, how firm will behave, especially on the investment cycle, and also what will market do, because market seems to, you know, forget about the bad news on the epidemic, and this is something that is very concerning to us.
Yeah, and you mentioned some of the difficulty in paying corporate debts in our last conversation, Ludovic, and you've mentioned in your notes the looming insolvency time bomb. Give us some time horizons as to when you think we're going to be looking at that.
Well, in the US, May and June were months of record high number of Chapter 11 proceedings and record high number of top bankruptcies. Companies above $50 million of turnover. So there is a risk of a domino effect. We expect in the US close to 40% increase in insolvencies between the beginning of 2019 and the end of 2021, which is basically the full period of the pandemic. So for us, it is a concern because, as you know, this is a cost of the economy. This is a cost when it comes to jobs. And this idea that, you know, we have only seen the beginning of it because of the small and medium enterprises that have been supported in the past couple of months, and that will actually not be supported in the second part of the year. So for us, this is indeed, you know, we call it the time bomb, because we know that business-to-business payment is, of course, the major issue when it comes to this crisis, because it is a cash flow crisis. And so we look at it and we try to make sure that credit risk, you know, is kept under control.
Why do the guests that we speak to, especially fixed income guests, say they're more concerned about the U.S. in terms of increasing bankruptcies than they are about Europe?
Yeah, because in Europe, they put in place a lot of schemes to protect companies from going bankrupt. You know, they put the partial unemployment benefits, which is definitely a liquidity support measure. They put in place guaranteed loans. You know, so in the US, you don't have this type of schemes. So you saw creative destruction at play, whereas in Europe, we have a form of protective destruction. So the time bomb is actually more for Europe, because we displace the problem for the second half of the year. But, you know, of course, you know, the US also is doing a lot, especially the Fed is doing a lot to protect companies' creditworthiness. But this is not solving the issue of the small and medium enterprises like we are solving it in Europe.
Ludovic, thanks very much. Thanks for joining us today. Ludovic Subran, Chief Economist at Allianz Global Investors, here on the European Market Open programme. And Ludovic will be continuing his conversation with Matt and I on Bloomberg Radio at 9 a.m. UK time. We go there after the TV show. Matt says that often. Coming up here on Bloomberg TV, though, on the European Market Open, as infections in Hong Kong hit a daily record and a US congresswoman calls Florida's outbreak out of control. We look at the global coronavirus situation next. This is Bloomberg.
Good morning, everybody. I'm placing a new order for euro at 114.446. So new order placed to buy at 1.4446. I will have to remove this order. It moved too far. So the order removed to buy euro.
On the CAC 40 as well. The DAX down a little more than 0.5% right now. The UK says it's secured early access to 90 million doses of promising, quote, promising coronavirus vaccine candidates from the BioNTech-Pfizer alliance and Valneva. That's as the number of confirmed cases continues to grow globally. COVID-19 flare-ups in Asian countries have prompted some governments to tighten restrictions again, and banks, including Citigroup and UBS, are suspending their plans to return staff to offices in Hong Kong after that city reported a daily record of more than 100 new cases. In the U.S., Florida's outbreak has been described as being totally out of control by a Dem representative, while the mayor of Los Angeles says his city is on the brink of new restrictions, possibly going back to shutdowns. Joining us now is Sam Fazeli, senior pharmaceutical analyst from Bloomberg Intelligence. And Sam, let me first get from you the current expectation in terms of a vaccine. When will we have one? How useful will it be?
Yeah, hi. Morning, Matt. So one of the ways I've tried to put this is that, we have a word called food. And you can, a bag of chips or fries is called food, and also a major steak dinner in a restaurant with, or a whole load of sides is also food. So definition is important here. What is a vaccine? You can have something that you inject into people and gives you an immune response and say, right, that's good enough for now. We're really worried about this spread. Let's go and just give it to folks. You can call that a vaccine. Or you can just wait and get the full data and results out of all types of populations and look for the safety. That's also called a vaccine. But very different game here, right? So if we want a quick answer, I think it's possible to have something by the end of the year, but I'm not sure how many people will be queuing up to take that vaccine.
Yeah, really interesting to put it that way, Sam, because you wonder whether the definition of food, or in this case vaccine, has shifted considerably given what populations and economies around the world have been through over the last months. Let me ask you about what we might hear from AstraZeneca later on today. There is expectation, a lot of talk about whether the Oxford test is going to be successful. There are 160 vaccine projects around the world, aren't there? And I understand the Oxford one is something that uses a viral vector, which isn't unique to Oxford, but some of the vaccines do and some don't. What's important about that?
Yeah, so we know of 3 similar, including the Oxford Astra one. So Johnson & Johnson's got a similar approach, and CanSino, the Canadian-Chinese company, has got a similar approach, different viral vectors. The aim of the viral vectors is to induce or activate at best possible activation level to the 2 key arms of the immune system. One is your antibody response that I'm sure everybody now knows about. What an antibody is and what it does is that it quickly finds a virus or a virus-infected cell and tags it and then helps clear the virus. The other one is the longer-term cellular immunity, it's called, that you've got these surveillance cells that hang around blood and try and kill infected cells and get rid of the virus. That's where we think the AstraZeneca, Johnson & Johnson, CanSino vaccines are going to be differentiated. But we've got to see the data. I think that the hope is there, and I think we'll see that. But it's all going to come down to how much and how different are they on the antibody side. Are they as good, or are you paying a price and losing that side of the immunity?
All right, Sam, thanks so much for joining us. Appreciate your help today. Sam Fazeli is a senior pharmaceutical analyst from Bloomberg Intelligence. We want to take a look right now at your movers this morning, starting with one that's up big time on positive trials of a COVID-19 treatment. Synergen PLC gaining 163%, so more than doubling, almost tripling on those positive results. And then speaking of positive results, Philips beating the street's estimates for both earnings and revenue, up 3.5% right now. Philips putting up some big gains, and it's a much bigger company, so it's a bigger weight on the stock 600. Julius Baer also beating expectations in the first half for profits, a trading boost there, but the bank's shares are down more than 5.5%. Up next, we're waiting for a breakthrough in Brussels. Will we get a deal for a rescue package? This is Bloomberg.
Welcome back to the European Market Open. We are 30 minutes into Monday's trading session, and things looking a little gloomier than anticipated on European stock markets, I guess. Down 0.6% as US futures have been worsening. If we look at what's happening from a sector perspective, you can see all sectors in negative territory, really. After 3 weeks of gains, though, for global equity markets, investors perhaps looking for new sources of optimism. Is that going to come in the form of renewed fiscal support from Brussels? We're watching to see developments there. The euro edges higher, BTP yields and other European bond spreads narrow just a little bit as we wait for news from Brussels. Are we also watching out for details on virus vaccines and what we can expect there? All of that perhaps to come later on today. So in the meantime, we see all of these sectors in Europe are under pressure. Travel and leisure to the most, to the greatest degree, and oil and gas stocks also under pressure today. Let's get a Bloomberg First Word News update. For that, here's Laura Wright here in London.
Thanks, Anna. The UK may join its international allies in suspending its extradition pact with Hong Kong. The move could come today when Foreign Secretary Dominic Raab addresses Parliament. Tensions between the UK and China have ramped up in recent weeks. They could see London introduce sanctions over human rights abuses, a move Beijing warns would have consequences.
If UK government goes that far to impose sanctions on any individuals in China, China will certainly make resolute response to it. You've seen what happened between China and the United States.
President Donald Trump is again questioning the competence of Democratic nominee Joe Biden. On Fox News, the president said Biden wouldn't be able to cope with the interview and instead would, quote, cry for mummy. It comes as the Democratic nominee has a 15-point lead over President Trump in an ABC News/Washington Post poll. Saudi Arabia's King Salman bin Abdulaziz has been checked into a hospital in Riyadh. The state-run Saudi press agency reports that's after being diagnosed with gallbladder inflammation. Officials have previously said King Salman remains in good physical health, dismissing speculation he may abdicate in favor of his son, Crown Prince Mohammed bin Salman. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
All right, Laura, thanks very much. Laura right there in London with your first word news. Now, things could be looking up for EU leaders in search of a deal on their recovery fund. Overnight talks failed to produce an agreement on how to structure the 750 billion euro package. But now officials have told Bloomberg the 4 countries who've been holding up negotiations are ready to agree on a compromise. Joining us now from Brussels is our reporter Maria Tadeo. And Maria, I know you've been covering this basically 24/7. What are you hearing as far as the number that the Frugal Four are willing to allow in grants?
Exactly, Matt. And now we're stretching into day 4. This has been a very long, also very tense negotiation. There's been a lot of back and forth over just how big should the grants component of this recovery fund be. Initially, we started on 500 billion euros. Then that was moved to 400 billion euros. And now we understand that it's actually 390 billion euros that could seal the deal with the Frugal Four, the countries that believe, if anything, this should be done through credit, through loans, through a typical bailout. Cash for reforms are willing to work with 390 billion euros. Overall, you're looking at a reduction of more than 100 billion euros. But I would say the negotiation is still ongoing. We know the European leaders are going to reconvene at 4 p.m. And I did happen to bump into Mark Rutte as he was walking to his hotel at 7 a.m. this morning, and he told me that he does not believe it's a done deal, that he still believes this is going to be another negotiation. I asked him just how long could this go on for. He said maybe until the weekend, quote, but that could also be just a joke.
It could also be just a joke, yes. I'm sure it doesn't feel like a joke if you've been working all the way through the weekend, Maria. This is going to be important political signalling. If a deal is reached, if a deal is reached, it'll seem like important political signals have been given by European leaders. What about all of the other areas that they were falling out about? Some of the conditionality, perhaps attached to money going to Eastern Europe, for example, or some of the reforms that Mark Rutte was talking about, wanting to see. What else is still being discussed?
Well, Anna, there's a big question mark around rebates, and that is countries, of course, that would like to see that rebate increase, including the Frugal Four. And it's interesting that if they do get more money now, it's a total contradiction to everything that we've heard until now, in which Emmanuel Macron had repeatedly said and very openly said that he did not believe that in a world post-Brexit, the European Union should engage in rebates. We also know there's a lot of back and forth on the governance of the recovery fund. If that money does go through to a country like Italy, who is going to ensure that the money is used to prop up the economy and to go into new growth plans? And what type of veto could another country have over those plans? And this is problematic because for someone like Giuseppe Conte, he cannot take anything that looks too much like a troika. And that is something that the Italians have been stressing over the weekend, saying we don't want to do anything that is not dignified enough for our country. And they also believe, by the way, that a veto over the payment and the commission given that money to a country raises a lot of legal question marks. But those are the two main issues at this point, the rebates and what happens to the overall governance of the deal. And I would also say, there's a lot of speculation already as to who is winning this argument. Mark Rutte has played this very hard ball, and he could go home with less grants, a bigger rebate, and special powers over this recovery fund. So overall, it's not a bad day for Mark Rutte, despite the fact that we know he's taken a lot of heat from many leaders here.
Will you be able to get some sleep tonight, or are these talks going to go late again?
Well, Matt, that's a big question. We're being told 4 p.m. Don't expect anything before 1 a.m. But that's an early night at this point.
All right. Well, good luck, and thanks very much. Maria Tadeo covering these talks for us on the ground there in Brussels. Coming up, the UK looks to suspend its extradition treaty with Hong Kong. Will that lead to an escalation? How couldn't it, frankly, lead to an escalation in tensions with China if it happens? We're live in the territory next. This is Bloomberg.
welcome back to the European Market Open this Monday morning, 40 minutes into a trading session that actually seems to be deteriorating a little bit. Looks a little worse than maybe futures had led us to believe. Euro Stoxx 50 down by around 0.8%. The FTSE 100 under pressure down by 1%. Now, the relationship between the UK and China is about to be tested. The British Foreign Secretary Dominic Raab has dropped a heavy hint that the UK will suspend its extradition treaty with Hong Kong. The move would mark a further diplomatic escalation in tensions after Britain banned Huawei from its 5G network and possible sanctions over human rights abuses. For more, Jody Schneider, Bloomberg senior international editor, joins us now from Hong Kong. Jody, good morning to you. So what will this mean then for the relationship between the UK and China, which already has been tested on a number of fronts?
Yeah, and it will probably be much more like what's happening with U.S. and China, or Australia and China, Canada and China, countries that have really had an escalation in the tensions given a range of disagreements. We already saw the Huawei that China was blocked essentially from UK's 5G network. And now, today, if this does occur, and we've had hints that it will, that Dominic Raab will address the Parliament and announce that the UK is going to suspend its extradition treaty with Hong Kong, which, of course, it handed back to China in 1997. So there's a number of fronts now on which these tensions are occurring, and including that after the national security law was imposed on Hong Kong by Beijing, this is the UK government expressed concern and worry about that, and now if it takes this step, it will be solidifying that concern in terms of its relationship with Beijing.
So what has China's response, what has Beijing's response been now, Jody?
Well, we've heard on several fronts that China's ambassador to London threatened the UK with retaliation, accused it of bowing to U.S. pressure when it banned Huawei from UK's 5G network, going back on an earlier, after it said it wasn't going to, and then it went ahead and did that. Then we've also heard that officials in Beijing are very displeased by Boris Johnson's invitation for as many as 3 million Hong Kong residents to apply for UK citizenship after that national security law was passed. So again, on a number of fronts, we're seeing this. Communist Party officials have warned British companies doing business in China they're set to face retaliation over the government's decision to stop working with Huawei.
Jody, thanks very much for joining us this morning. Jody Schneider there, Bloomberg's senior international editor in Hong Kong, giving us some insight into this developing into these developing tensions. Let's get the Bloomberg Business Flash now. For that, we go back to Laura Wright. Laura?
Thanks, Matt. Philips is sticking to its 2020 target. That's amid strong demand for its ventilators, with orders flooding in from emerging markets and US virus hotspots. The health tech company also sees a recovery in spending on other equipment. Philips is targeting a modest gain in sales growth this year and an improvement in its profit margin. Japanese exports have fallen by more than 20% for a third straight month. That's despite key markets starting to reopen from virus shutdowns. The slump was led by steep declines in exports of cars and auto parts. Overall shipments overseas were down over 26%, worse than forecast. Dividends paid by UK companies could take 6 years to recover. That's according to a report from financial data firm Link Group. Payouts this year could shrink by nearly half to £56.7 billion. Over 200 companies either cancelled or cut dividends. That resulted in a far more drastic reduction than during the financial crisis. That's your Bloomberg Business Flash. Matt, Anna.
Laura, thank you very much. Laura Wright with the Business Flash for you. Just looking for some breaking news for you on the Bloomberg terminal then. Just getting to some, we've got a red headline crossing the Bloomberg. Adevinta said to near a $9 billion cash and stock deal for eBay classifieds. This has been something that's been talked about for a little while now as to who was going to win these particular assets. Said to get significant minority stake in the eBay, is said to get a significant minority stake in the combined group. So even though they are selling this classifieds business, it seems not stepping away entirely. And eBay and Adevinta said to make the announcement as soon as Monday. So interesting news lines coming through there. Let's get back to the banking sector, where we have been talking, of course, to the management of Julius Baer, and it is Julius Baer that kicks off the European bank earnings season with a record first-half profit. Our Bloomberg Daybreak anchor Manus Cranny spoke to the Swiss bank's CEO, Philip Rickenbacker, earlier.
Clients have been extremely active in the market, but not just during the peak period of March and April. We've actually seen continued client activity throughout the entire half year, with a bit of on and off. But coming out of the first into the second half year, I still sense there is a lot of dynamic as clients are looking what are the markets doing, how are now those recovery patterns happening in the different countries. And it's going to be interesting moving forward.
When I look at the Treasury book, and that's how you just chatted with me before you came in and said, look at the FX, the derivatives, and the metals book, that's £500 million Swiss francs. My question is that hedging, or is that actual active client engagement? How would you define that kind of number in the report?
Obviously, in our balance sheet, there are two kind of activities. On the one side, there's the Treasury book, and the Treasury book has been revalued with the huge change in dollar interest rates throughout the first half year. But obviously, on the other side, on the trading side, we've been benefiting from very high client activity throughout that period, which is reflected in the numbers.
And the guidance going into the second half of the year, are you going to need exceptional volatility again to deliver these kind of numbers and margins?
I think obviously volatility helps, and this is a business. We are a business model that can capitalize on volatility, as we have proven. And I think we're going to have it. We're going to have it obviously from a market perspective. There's going to be stimulus in the market. There's going to be political uncertainty. So I think there are a few ingredients in the second half year that can truly drive volatility.
Is it the U.S. election that's perhaps the biggest risk for you?
That's obviously one of the risks, but not the only one.
The other dynamic is this: we look at this amazing recovery in equities, the change in credit spreads. Do you think there's a certain amount of detachment from our markets from reality?
That's very hard to comment. I think obviously, in reality, in the real economy, the impact of the crisis is going to play out over a longer period of time. In the first half of this year.
Do you think we're underestimating the length of time this is going to work out over?
Maybe, but I think what's very hard to predict is really the recovery patterns. And I think those countries that have taken measures early and in a thorough way and in a deep way, they will see faster recoveries, whereas other countries will be in for a much longer game.
Philip, it's a market show. Anna and Matt are sat in London. We've got a global audience. The biggest risk going into the second half of the year, what do you think it comes from? Negative rates, politics, China? What is it that goes through your mind?
I do think we're going to see uncertainty, and I think the uncertainty lies in the speed and in the depth of the recovery patterns. Where does it happen and when? And I think that uncertainty is obviously a big risk, and then a bit of overlay, obviously, from what's happening politically. But I do think we
new order placed for euro, sell short, with the price 114.482. So order placed to sell short at 114.482.
Live team in Europe, this is Bloomberg.
short position open at euro at 114.42. So new position open for euro at 114.482.
Welcome back. The European market open 51 minutes into a trading session that's negative but off lows, down by 0.6% on European equity markets. Let's take a look at some of the stocks that are on the move this morning. And here's one you might not have had on your radar before. Synergen, positive trials of a COVID-19 treatment. So this is a treatment, not a vaccine. But we know what happened to other companies that have released information about positive treatment. And some of those have been bought by governments and taken into the fold. So this Synergen, Southampton-based, AIM-listed business flying high, and the stock of this company up by 180% at this hour. AstraZeneca, sticking with the COVID fight, AstraZeneca is also in focus. We're waiting for results of the Oxford and AstraZeneca COVID vaccine trials, at least early stages there. But AstraZeneca shares up by 1% off highs, but still trading to the upside. Julius Baer also in focus. We just heard from the CEO a moment ago, recording a first half profit on a boost from trading activities, but expects more volatility to come, and that stock under pressure this morning, down by 4.3%. Matt?
All right, joining us now from the MLive team is Christine Aquino. She leads the team here in Europe. Christine, let me start with the question of the day, which is which earnings are going to matter most this week? What are you hearing?
Hey, Matt. Well, we are particularly interested in Tesla earnings for a couple of reasons. I mean, obviously, the first would be it's going to be a good gauge of where the animal spirits lie in this part of the economic cycle at this point of the year, because, of course, if there's anything that is a good indicator of that, it would be the response to tech earnings, and Tesla in particular would be at the forefront of that. And, of course, it's interesting, too, from the perspective of a gauge of retail investor appetite and activity at this point in time. Obviously, it's been a very popular stock among the Robinhood crowd, for instance, and the response to this particular set of earnings would really go a long way to showing us where that retail sentiment lies, and also help us gauge, whether that is a leading or a lagging indicator at this point of the cycle.
I just want to clarify for everyone at home, the Robinhood crowd. When people say that, maybe because I'm older, I think of David Einhorn and these, poker playing hedge fund managers from New York who run the charity. When you say that, and Mark Cudmore said it earlier, you're talking about the new Robinhood crowd, which is this trading app crowd, people who are basically retail investors.
Absolutely. And we're talking about day traders here, people who aren't your typical big money investor, talking about individuals who, for whatever reason, are at home now and looking at this more closely and looking at stocks that offer particularly high growth in a relatively short space of time.
Yeah, important to clarify that then, Christine, and certainly the retail story, a fascinating one that we talk about. Christine, I guess you're watching what's going on in Brussels just like many others, but it seems markets and certainly some asset classes are already reacting as if we've got something that looks like a deal. I suppose the fact they're into day 4 of talks is being seen as a positive.
Yeah, absolutely, Anna. And I think, markets in Europe in particular are still running with the idea that there will be a deal at some point, and we're just in the stages of it getting worked out. And the fact that even a deal like this is on the table at this particular point in time, I mean, if we look back to just a year ago or even just 6 months ago, it would be almost inconceivable that something of this scale and on this magnitude on the EU-wide level would even be on the table. But here we are. I think the question now for investors is really, when is that sort of euphoria going to run out, and when will investors start demanding and start expecting more concrete action toward the steps toward the actual deal? Because, of course, we have to make the distinction between the fact that EU leaders are still working towards this deal, and it's not near the stage where it's a done deal and it's about to get passed. So we're nowhere near that at this stage. But markets seem content with the developments so far. Just the key thing to watch out for is, when is that going to run out?
Yeah, Christine, thanks very much. At least they're still talking. Christine Aquino, who leads our markets live team here in Europe, watching Brussels and, of course, watching the earnings story as well. Just want to mention, Matt, one stock that we haven't mentioned so far this morning, and we should do that. That is Natixis in France. It is the biggest faller in the banking sector in Europe. It's down by 6.4% today. And we heard after hours on Friday that the French cooperative banking group BPCE has no intention to make an offer for Natixis outstanding shares. So that is interesting for markets, and as a result, it's being factored in by investors, and you can see that stock down by 6.4% on a day, Matt, where we've lost a little bit of our recent rallying spirit, I suppose, for European stocks.
Yeah, absolutely. I think there are concerns out there about the spread of the virus. We're going to talk a lot more about that on our radio program, and I encourage our viewers to tune in. You can do that if you're in the London area on DAB digital radio, or you can use the internet and just type in Bloomberg Radio. Get us from anywhere in the world. Anna and I headed over to the radio studio. Up next, if you're going to stick with television, it's Bloomberg Surveillance.
hardline view, Europe's so-called frugal four are said to be ready to accept doling out 390 billion euros in grants as recovery funds talks stretch into a fourth day. Julius Baer kicks off European bank earnings with a record first-half profit. The bank's chief executive tells us continued volatility will boost trading. And the pandemic continues to spread in the U.S. Florida's infection rate surges, and L.A. is on the verge of another shutdown. A medical journal is due to publish more information on Oxford's vaccine trial. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the markets are a bit more quiet than usual, but a lot of the focus is, of course, on what's going on with euro, given what we've seen in the markets and given actually what we saw with the EU leaders. So the euro actually strengthening to a 4-month high. European bond spreads are narrowing as a lot of regional leaders here in Europe are making progress in negotiating this historic stimulus package for economies devastated by the pandemic. So you can see euro dollar 114.55 and gold pretty much flat. Now let's get straight to the Bloomberg. First word news here in London is Laura Wright. Hi, Laura.
Thanks, Francine. The UK may join its international allies in suspending its extradition pact with Hong Kong. The move could come today when Foreign Secretary Dominic Raab addresses Parliament. Tensions between the UK and China have ramped up in recent weeks. They could see London introduce sanctions over human rights abuses, a move Beijing warns would have consequences. President Donald Trump is playing down a rise in coronavirus cases. He told Fox News that many people are experiencing nothing more than sniffles and that positive tests are only up because of wider testing. He's also calling infectious disease expert Anthony Fauci, quote, a little bit of an alarmist, but says the two men have a great relationship. Members of Russia's elite have been given early access to an experimental COVID vaccine. Sources told Bloomberg of the jabs as the country races to be the first to develop an inoculation. Top executives began getting shots as early as April. They were developed by a state-run facility in Moscow. Last week, it completed a phase 1 trial involving Russian military personnel. Saudi Arabia's King Salman bin Abdulaziz has been checked into hospital in Riyadh. The state-run Saudi press agency reports that after being diagnosed with gallbladder inflammation. Officials have previously said King Salman remains in good physical health, dismissing speculation he may abdicate in favor of his son, Crown Prince Mohammed bin Salman. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thanks so much. Now, things could be looking up for EU leaders in search of a deal on their recovery fund. Overnight, talks failed to produce an agreement on how to structure the 750 billion euro package. But now officials have told Bloomberg that the 4 countries who have been holding up negotiations are ready to agree on a compromise. Well, joining us now from Brussels is our reporter Maria Tadeo. Maria, great to have you on the program. So there are many points on which, you know, there's disagreement, including the frugal four trying to have some kind of control about the reforms. What do we have as a blueprint now?
Well, Francine, what we know is that when you look at the grants here, 390, that could be what a compromise looks like, 390 billion euros. Going into the summit, just to recap, of course, the Frugal Fours have repeatedly said that they wanted this to be more focused on credit, that they believed a typical bailout cash for reforms actually worked better. The South, with Angela Merkel and Emmanuel Macron on board, had repeatedly said that they were not willing to go below 400 billion euros in grants. That is now the latest compromise that we hear. It could be 390, and that could seal the deal on that front. But as you point out, there are still many issues happening here. One has to do with the governance of this package, which has become almost as problematic as the amounts. Mark Rutte, the Prime Minister of the Netherlands, has been playing the summit very hardball, and he's been insisting that countries should have the right to veto the payment from the Commission to a country if there's question marks about how the money is being used. For the Italians, of course, this is very problematic. Giuseppe Conte cannot go back to Italy with anything that looks too much like a troika. So the governance is still a sticking point, and we know the overall package, when you look at the rebates that could be included, when you look at the rule of law and what that means for Eastern European countries too, this is going to be another very long day. So the fact that we have an agreement on potentially the grants does not mean that this is going to be easy today. And you should also factor here that ultimately, even if we do get 390 billion euros in collective debt, we're taking a big cut. You're looking at less than 100 billion euros of the money that was initially put forward, 500 billion euros. So you could argue that the frugals have played this very hardball, but they are getting what they wanted, which is is less money on the grants, perhaps a bigger rebate, and more say in the way that the money is distributed to countries in Southern Europe.
Maria, what exactly are we expecting today? If there's not a breakthrough today, can we see it later in the month, and does it make a difference?
Well, Francine, there's two theories really floating around at this point, that we could see European leaders go back at 4 p.m., really go into the early hours today and get this deal done by tomorrow. The idea that we're still going on today 4 and this hasn't really fully collapsed does show that they want to get this done this week. If it's not possible, we have heard another theory that is pointing perhaps at a bigger break and another summit that would take place in August to let the tension that we've seen over the weekend cool down. But the fact that everyone is still very much at the table, that this hasn't really collapsed yet, and we're going into day 4, does signal, as I mentioned, that there is an aim, a goal to get something done this week.
Maria, thanks so much. Our reporter Maria Tadeo there in Brussels, following all the latest developments on this marathon EU summit. Now, coming up, Julius Baer posts its best ever first half profit as market volatility boosts client trading. More from our interview with the chief executive, Armanis Krani, will be live with us later. That's later in the program, and this is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, the EU governments holding up rescue negotiations are ready to agree on a key plank of the deal. According to officials, the Netherlands, Austria, Denmark, and Sweden will agree to 390 billion euros of grants as part of the package. Now, the EU had originally wanted 500 billion euros. The rest of the 750 billion euro plan will consist of low-interest loans. Well, joining us now this morning is Ralph Preuser. He's a global head of rates research at Bank of America Global Research. Ralph, great to have you on the program. It seems that the markets think that it's a thumbs up for the deal. Is this deal a done deal, and will it be enough?
I don't think it's a done deal. I think there's many important questions that still need answering. I understand the market's reaction because 390 billion doesn't sound too different from the 400 billion that was the minimum that France and Germany apparently insisted on as the size of the grants. So the difference seems small. But as Maria said, and as you discussed a minute ago, the devil is in the details. And the key question is, at this point, what budget rebates do the Frugal Four want in return for agreeing to 390 billion of grants? Because the whole deal could fall apart on that. And then the key question is also on the governance in terms of if this, and again, you said this already, if this looks too much like a Troika program, we might get a deal, but no one might ever apply for it, in which case the economic impact is severely limited.
So, Ralph, what exactly is priced in, at the moment in the markets? And whatever is priced in, will the markets quickly move on, or do you expect it to have a longer-term impact on some of the things that you look at?
I don't expect it to have a longer-term impact. I think one of the key things that continues to concern us is the fact that positioning in the periphery is already quite long. BTP bond spreads are now sub 160 basis points. We're not far off the levels where we were at the beginning of the year. We're only about 20 basis points away from the tights that we were at in 2018, 2019. This rally in BTPs is becoming quite long in the tooth. So even if we end up with a deal, I think the risk at some point becomes a buy the rumor, sell the fact kind of market reaction, where investors start taking profits on carry trades that are very crowded and have gone extremely well. So from that perspective, we are looking at ways of trying to hedge against investors starting to reduce positions somewhat. But the bigger question is, and that's the longer term question, is will this deal actually make much of a difference from a macroeconomic perspective? And the answer is unfortunately not. But even if we take the original proposal of 750 billion as the total envelope with a very heavy share of grants, the fiscal impulse that could have generated per year was less than a percentage point of GDP, not starting before next year. Does this really help us to bounce back meaningfully more quickly on the back of the pandemic shock? No, unfortunately not. The value of this deal all comes down to the political symbolism of Europe standing together and crossing some important red lines in terms of grants, large-scale joint issuance, etc. But if this solidarity hope that we had a few weeks ago is now starting to be called into question by very hardline negotiating tactics from the Frugal Four, then maybe even that symbolism gets tainted a little bit over the next few weeks.
Ralph, so what does it mean for actually where you find value if in any European countries? I mean, do Italian yields at the moment look attractive because there's a political will if we have a deal, or can it all reverse back to 180 degrees?
I think there is still value in selective carry trades in Europe. The question is, do you want to just leave those open, or do you start looking at hedges? So what we've been telling clients to do is, yes, by all means, especially as a benchmark investor, you can't afford not to be invested in the periphery and to run some overweights there, probably not hoping for much more of a spread tightening, but just hoping to earn the carry that you can versus bonds in particular. But think about how you can put hedge overlays on to protect yourself against any adverse market scenarios. So for example, if you look at where bonds trade on asset swap, there's a huge supply concession that's priced in on the expectation that we'll get this wave of government bond issuance that actually isn't going to materialize to that extent. So from that perspective, bond asset swap, we think, are a reasonably attractive hedge. BTP linkers are a very attractive asset class in our view. BTP flatteners look attractive, and all of these trades have hedge elements, but should also work in the central scenario of continued grab for yield.
Ralph, when you look at the path to a full agreement amongst EU leaders, and we know that they're reconvening at 4 p.m. to try and iron those out, you talk about a symbol for Europe, I guess, of solidarity. How does that actually translate into the economics? How does it translate into the politics? I mean, is this a real game changer, or is it again just something on the long and winding road to more or less Europe integration?
We thought it was a game changer. We turned positive on the periphery for the first time this year on the back of the original Franco-German proposal, which was then taken up and expanded on by the European Commission. Because we thought that the U-turn that we saw in particular from Germany on a number of important red lines was hugely significant, right? This was the first time that we had an actual real proposal for essentially fiscal transfers in the form of grants, very large-scale joint issuance, and further down the road, the potential for the EU to get its own tax raising powers, right? Those are very crucial elements in the completion of the institutional architecture of the EU that we thought were very, very meaningful, and we continue to think so. So as long as we maintain those key elements, even if we maybe don't get the overall size we want, even if maybe there are some potentially problematic veto powers further down the road that aren't entirely removed, it still creates exciting opportunities for the EU to develop further towards, closer fiscal union, if you want to call it that, down the line. The problem, however, is that in terms of surmount, and that removes a lot of the Eurosceptic rhetoric that we saw pick up to an alarming extent in the periphery, in particular on the back of the original pandemic. The problem is that it doesn't really change the needle when it comes to the rebound that we can expect from the economic perspective. And that clearly leaves the political risks as remaining in the room.
Ralph, thanks so much. Ralph Preußer there from Bank of America. Global Research stays with us. Now, coming up, President Trump says without evidence that the U.S. has the best mortality rate in the world. Well, the mayor of L.A. is saying that his city is on the brink of new restrictions. Up next, we bring you the latest developments in the U.S. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Thanks, Francine. Disney is slashing ad spending on Facebook. That's according to the Wall Street Journal. It's a blow for the social network, as Walt Disney is the #1 advertiser on its platform. It comes as a growing list of companies are halting spending. Many are criticizing Facebook's handling of hate speech and misleading content. No official response yet from Disney. Marks and Spencer is set to announce job cuts this week. That's according to Sky News. It comes as the coronavirus pandemic continues to affect its business. Back in May, the company's chief executive said the pandemic has given M&S the opportunity to accelerate its turnaround. A spokesperson told Sky the company does not comment on speculation. Philips is sticking to its 2020 target. That's amid strong demand for its ventilators, with orders flooding in from emerging markets and US virus hotspots. The health tech company also sees a recovery in spending on other equipment. Philips is targeting a modest gain in sales growth this year and an improvement in its profit margin. That's your Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, in the U.S., the White House is set to start talks on the next virus stimulus package. This comes as deaths pass 140,000. Well, Florida's outbreak was described as out of control by a Democratic representative. The mayor of Los Angeles has also said that his city is on the brink of new restrictions. President Donald Trump, meanwhile, said the U.S. has the best mortality rate, but the White House's own data shows the U.S. rate isn't the lowest. Still with us, Ralph Preuser from Bank of America Global Research. Ralph, I have about 1,000,005 questions for you, but we're limited in time. What does the number of infections, the possibility of more lockdowns actually mean for the rate of growth of the U.S. economy?
It's a big downside risk. And it's not really due to the restrictions as such. What the evidence actually starts to show is that the consumers' own response is incredibly important here, right? So consumers start reacting to renewed virus pickup numbers way before new restrictions come in, and we see that in the Bank of America credit card data that my colleagues in the US publish as an example. So from that perspective, we do need to worry about the virus case counts going up, irrespective of whether or not we think governments will react with renewed lockdown measures, because consumers tend to slow all by themselves.
What does that mean, Ralph, for rates? What does it mean for what the Fed will do next and the path forward?
So there's a huge number of important implications from this. You mentioned the fiscal efforts, which in my mind actually are front and center at this point for the US. We do need to see the extension of the enhanced unemployment benefits, which would normally expire by the end of July, just because that's such a massive component of what is actually sustaining demand in the US at the moment. And then the US, like everyone else, is faced with the question of how to deal with this very significant, large and permanent income shock that we're currently experiencing. And what that ultimately will translate into for the Fed is much more considerable forward guidance compared to what we have so far. I think it's a bit early to expect that for this month, but we are looking for significant strengthening of forward guidance come the September meeting. And to be fair to the Fed, they are the central bank that is closest to actually acknowledging quite how long-term the implications of this crisis will be for monetary policy. The Fed is looking to, if you look at the minutes that we had from the June meeting, is looking to conclude its strategy review at the earliest opportunity to basically be able to give the market that longer-term guidance. The ECB is only just starting its strategy review. Right? The contrast is quite clear. So lower for longer, it makes it increasingly difficult for rates to break out of the kind of 50 to 80 basis point trading range that we've been flagging for pretty much all year. And there probably are downside risks to real rates in the US still.
Ralph, I mean, do the downside risks come also in the form of deflationary pressure, or are we just talking about a global downturn?
We do have disinflationary pressures, right? This shock is first and foremost a very, very large demand shock. And you see that very clearly in the UK data prints that you had last week, actually, with services inflation running at its lowest ever, as far as I'm aware. So the disinflationary shocks will dominate for the time being. But because the US is so much more advanced, or the Fed, I should say, is so much more advanced in terms of recognizing that disinflationary shock, its ability to actually sustain break-evens is probably higher than elsewhere. So from that perspective, the deflationary shock is a long real rate trade. The reflation trade for the US is not a short nominal rate trade, it's a long break-even trade. So either way, we don't really see a lot of upside pressure to real rates in the US because the Fed will be forced to remain accommodated.
Ralph, thank you so much. Ralph Preuser there, Global Head of Rates Research at Bank of America Global Research. Now, coming up, European earnings kick off in high gear after some promising numbers last week, and the good times keep rolling. We'll discuss that next. This is Bloomberg. Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Thanks, Francine. The EU governments holding up rescue negotiations are ready to agree on a key plank of the deal. According to officials, the Netherlands, Austria, Denmark and Sweden will agree to 390 billion euros of grants as part of the package. The EU had originally wanted 500 billion euros. The rest of the 750 billion euro plan will consist of low-interest loans. The UK may join its international allies in suspending its extradition pact with Hong Kong. The move could come today when Foreign Secretary Dominic Raab addresses Parliament. Tensions between the UK and China have ramped up in recent weeks. They could see London introduce sanctions over human rights abuses, a move Beijing warns would have consequences.
If UK government goes that far to impose sanctions on any individuals in China, China will certainly make resolute response to it. You've seen what happened between China and the United States.
President Donald Trump is again questioning the competence of Democratic nominee Joe Biden. On Fox News, the president said Biden would not be able to cope with the interview and instead would, quote, cry for mummy. It comes as the Democratic nominee has a 15-point lead over President Trump in an ABC News/Washington Post poll. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Thank you so much, Laura. Now, here are some of the stories that we're looking at for this week. Later today, the U.S. Secretary of State, Mike Pompeo, kicks off a two-day visit to the U.K. with a meeting with Prime Minister Boris Johnson. On Wednesday, the U.S. Senate Banking Committee is set to vote on President Trump's two Federal Reserve Board nominees. Also on Wednesday, Tesla reports its second quarter earnings. The stock has been on a relentless rally, advancing 60% the past month alone. And then on Friday, we'll be keeping an eye on the release of the European PMI data for signs of a pickup in economic activity. Now, joining us to discuss all of this is Julian Schillingworth, Chief Investment Officer at Rathbones. Julian, before we get on to the rest of the agenda, what's your take on what's happening in Europe with this new deal that we seem to be closer to agreeing on, but which is also watered down to what we were promised a month or two ago?
Yeah, morning to you, Francis. Yeah, I mean, I have to say that on Friday morning when I was discussing this with colleagues, I was very unhopeful that anything was going to be agreed by the end of this weekend. So I think it's a good step forward, and this last-minute compromise, although slightly watered around the grants that obviously Italy, France and Spain originally wanted, I think at least gets the deal probably across the line. But it's not done till it's done, is it? Because obviously negotiations resume this afternoon, but it is definitely a positive, and I think that we've seen spreads come in on Italian bonds. I think we're seeing more of a rally if the deal gets signed off. And I also expect that European investors generally will view this as a positive, and we could see the euro improve further against the dollar as well.
So where do you see the biggest value, Julian? What looks attractive right now?
Sorry, Francine, I lost the first part of the question.
So what looks attractive in the markets right now?
Fine. I think at the moment we as a whole are still pretty defensively positioned, so that we're saying to our clients that we see rates remaining lower for longer around the world, and in that sort of environment with lackluster growth as we have lockdowns occurring in a variety of places regionally, that growth will be slow to recover as we go through 20 into 21, and you want to remain with companies that can deliver good cash flow and growth in a lackluster economic backdrop. So we still favour technology names. We favour those growth names that are consumer related, and we are avoiding the more cyclical, particularly deep cyclical names where we are very concerned that they won't do particularly well in a very slow economic recovery as we come out of this virus pandemic.
Julian, do you make a difference, regionally? So depending on actually where some of these companies are based, or do you just go for global international companies?
I think we still, I mean, despite having seen a really strong rally in US tech, we still like the States, and overall, as in our regional allocation, we are overweight the US, and we continue to say that because we think it has the greatest universe of opportunity despite problems over the virus, I think we may well be turning a little more positive on Europe, particularly post this, if the recovery fund can be done, but remain very nervous around financials in Europe, I have to say still, and we still worry that perhaps it's going to be a economic recovery of two halves, with the southern European countries slower to recover than the northern ones. So I think favouring probably industrials more in the northern part of Europe as well, and we still like Japan.
Julian, we have a great chart looking at European earnings kicking off this week, and you look at the rally and you kind of wonder whether it's going to be reckoned with, as a lot of strategists are predicting losses. What overall are you expecting from this earnings season? Is it are you focused on dividends? Are you focused? It's very difficult to forecast it, so it's actually very difficult to see what happens.
Yeah, I mean, I think that in some respects the market is expecting pretty awful earnings numbers across the board, be that in the United States and Europe and the UK. And I think that obviously what I'm going to concentrate on here is, yes, dividends are important, but again, I think people have slightly written off 2020 dividends as well. And anything that you get from companies above expectations will be a bonus. But what's important is the outlook statements and how they are seeing their trading environment now. Because what I'm worried about is a tail-off in the strong bounce we saw in May and June in economic activity, and whether they're going to comment about how they see Q3 and let alone how they see Q4.
Julian, I have to say we have some killer charts today. Thank you to Hilary Clark. So there's another one that I wanted to show you, which basically looks at bargain prices in European stocks. But we haven't really talked about the U.S. election. How will that change market direction in the U.S. but also around the world, depending on who goes into the White House in November?
Yeah, I mean, I think that obviously Biden is well ahead. We've got a long way to go, and one should never underestimate Donald Trump forcing out of the fire at the last minute. But what I would say to you is that I think equity and bond markets coming into a possible Democratic president, yes, taxes will rise, but it is that Biden is very much a middle of the track. As long as he doesn't take a running mate who is, well, not from a European perspective, but from a US perspective, more left-wing, then I think markets will be fairly relaxed. And I suspect that a few jitters running into the election as we get into October, November in the US market, particularly around those sensitive areas such as tech, where there's always a worry of greater legislation. But I think overall the market's now coming to terms with a Biden presidency. Whether we see one, we shall have to wait and see.
Julian, thanks so much. Julian Chillingworth, their Chief Investment Officer at Rathbones. Now, coming up, as infections in Hong Kong hit a daily record and a U.S. Congresswoman calls Florida's outbreak out of control, we look at the global coronavirus situation next. This is Bloomberg. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Thanks, Francine. Adevinta is nearing a deal to buy eBay's classifieds unit for about $9 billion. Sources told Bloomberg the agreement would come in cash and stock and would give eBay a significant minority stake. It looks to have beat out the competition, including Process. No official word from either company. An announcement could come as soon as today. Japanese exports have fallen by more than 20% for a third straight month. That's despite key markets starting to reopen from virus shutdowns. The slump was led by steep declines in exports of cars and auto parts. Overall, shipments overseas were down over 26%, worse than forecast. Dividends paid by UK companies could take 6 years to recover. That's according to a report from financial data firm Link Group. Payouts this year could shrink by nearly half to £56.7 billion. Over 200 companies either cancelled or cut dividends. That resulted in far more drastic reductions than during the financial crisis. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Laura. Now, the UK says it secured early access to 90 million doses of promising coronavirus vaccine candidates from the BioNTech-Pfizer alliance and Valneva. That's as the number of confirmed cases continues to grow globally. COVID-19 flares up in Asian countries have prompted some governments to tighten restrictions again. In the U.S., Florida's outbreak has been described as being totally out of control by a Democratic representative, while the mayor of Los Angeles says his city is on the brink of new restrictions. We await a medical journal publishing more information on Oxford's vaccine trial as well. Well, joining us now, Sam Fazeli, senior pharmaceutical analyst from Bloomberg Intelligence. Sam, thank you so much for joining us. Where are we on the vaccine? There are a number of promising trials. Are they really promising, or is it speculative at the moment?
Oh, hi, Francine. So far, so good on the vaccine front. You know, the data we've seen is decent, small trials, only testing one aspect of a vaccine in healthy young folks with no comorbidities, which is not a surprise because these are small trials and early trials. We need to see more. We need to see it work in patients, individuals who are older, who have got comorbidities, who have perhaps some issues with their immune systems. Once we see that, then I'll get more excited.
How quickly can we see that or not see that, Sam? Is it, is it 2 months away? How early can we actually have an idea of when we'll get a vaccine by?
Yeah, I think a couple more months. Again, I'm pretty sure that we'll have doses of something that can induce an immune response in people by the end of the year, early next year, by the end of the year. But is that a safe, fully effective, protective vaccine for numbers of years? We will only know well into 2021. I'm pretty sure that's how long it will take.
So, Sam, how are you seeing this virus actually develop? Do we have any idea of whether it's mutating? And also, given that we see now pockets of infections in certain parts of the world, and the U.S. is pretty bad also in certain states, is this a new normal? Are we going to have to be able to deal with it and have more targeted lockdowns? Or are we getting better at it, basically?
No, we're certainly getting better at treating it, because I'm pretty sure that as these various treatments continue to show their effectiveness, we had the little one announced today from Synergen, the UK biotech company that no one had looked at for years. If you look at that, then I think in terms of trying to manage the disease, we're getting there. In terms of outbreaks, you've got to keep seeing it until people are immune. It's just, it's like flu. We vaccinate people, we still get flu at the end of the day. So, but what we're making progress. I think the experts are doing pretty well at this.
So are there, if people catch it, do we have any idea of how immunity works? If you have antibodies, does it protect you for a couple of weeks, a couple of months, or almost not at all?
No, I think if you have antibodies, it would be amazingly surprising if it doesn't give you protection. And there's a lot of this talk about these antibodies waning over time. That's not abnormal. What you want is to make sure that you have a memory, an immune memory behind, so that if you see the virus again, your immune reaction is much quicker and clears the virus from infecting you. That's what we hope is the case, and I haven't seen data that proves otherwise yet. So I'm hopeful for the vaccines.
Sam, I'm looking at a story on Bloomberg. It's saying that the Florida virus is out of control and Los Angeles is actually on the brink. Is the only way to stop it through lockdown and people wearing masks?
Yeah, I mean, if they had worn masks, I'm pretty sure look, we've been open in France, in the not the UK, France, Spain, Italy, for several weeks now. We don't see a massive resurgence in the number of cases, despite the fact that they're also testing more. So at the end of the day, I don't think that there is any rocket science to this. You cover your face for a virus that's transmitted by droplets in the air, you're less likely to be breathing it in. So, and you keep your distance, you're less likely to breathe it in. This is very simple. I don't understand why it's become such a major issue in the U.S.
Sam, thank you so much. Sam Fazeli, their senior pharmaceutical analyst from Bloomberg Intelligence. Now coming up, Julius Baer posts its best ever first half profit as market volatility boosts client trading. More from our interview with the Swiss bank's chief executive next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now we're seeing a bit of a reversal when it comes to the markets. We were talking earlier about the euro up on the back of belief, actually, that maybe the EU frugal four or the countries that have been holding out are ready to accept this $450 billion in grants for the recovery fund. Now, Julius Baer kicks off European bank earnings with a record first half profit. Our Bloomberg Daybreak anchor, Manus Cranney, spoke to the Swiss bank's chief executive, Philippe Rickenbacher, earlier. Take a listen.
Clients have been extremely active in the market, but not just during the peak period of March and April. We've actually seen continued client activity throughout the entire half year, with a bit of on and off. But coming out of the first into the second half year, I still sense there is a lot of dynamic as clients are looking, what are the markets doing? How are now those recovery patterns happening in the different countries? And it's going to be interesting moving forward.
When I look at the Treasury book, and that's how you just chatted to me before you came in and said, look at the FX, the derivatives and the metals book, that's $500 million Swiss francs. My question is that hedging or is that actual active client engagement? How would you define that kind of number in the report?
Obviously, in our balance sheet, there are two kind of activities. On the one side, there's the Treasury book, and the Treasury book has been revalued with the huge change in dollar interest rates throughout the first half year. But obviously, on the other side, on the trading side, we've been benefiting from very high client activity throughout that period, which is reflected in the numbers.
And the guidance going into the second half of the year, are you going to need exceptional volatility again to deliver these kind of numbers and margins?
I think obviously volatility helps, and this is a business. We are a business model that can capitalize on volatility, as we have proven. And I think we're going to have it. We're going to have it obviously from a market perspective. There's going to be stimulus in the market. There's going to be political uncertainty. So I think there are a few ingredients in the second half year that can truly drive volatility.
Is it the U.S. election that's perhaps the biggest risk for you?
That's obviously one of the risks, but not the only one.
The other dynamic is this: we look at this amazing recovery in equities, the change in credit spreads. Do you think there's a certain amount of detachment from our markets from reality?
Well, it's very hard to comment. I think obviously, in reality, in the real economy, the impact of the crisis is going to play out over a longer period of time. In the first half of this year.
Do you think we're underestimating the length of time this is going to work out over?
Maybe, but I think what's very hard to predict is really the recovery patterns. And I think those countries that have taken measures early and in a thorough way and in a deep way, they will see faster recoveries, whereas other countries will be in for a much longer game.
The biggest risk going into the second half of the year, what do you think it comes from? Negative rates, politics, China? What is it that goes through your mind?
I do think we're going to see uncertainty, and I think the uncertainty lies in the speed and in the depth of the recovery patterns. Where does it happen and when? And I think that uncertainty is obviously a big risk, and then a bit of overlay obviously from what's happening politically. But I do think we continue in a volatile situation, and it's good for those players who can capitalize on volatility.
Well, that was Julius Baer Chief Executive Philipp Reichenbacher. Now, joining us from Zurich is our very own Manus Cranny. Manus, what exactly has been the biggest challenge for this Chief Executive?
Well, he went into reorganization mode. He chatted to you, didn't he, when he came on board in March about the job cuts. But, you know, the narrative has moved on, Francine. I think as we start the week on the road in Switzerland, it's about the 3 Vs. It's about volatility, vaccines, the news flow this morning, and VAR, and that's going to become more evident in the UBS and the Credit Suisse numbers, the value at risk. But if you look at the momentum coming from the clients here in the FX derivative and the metals space, that I think speaks volumes about where we are. You might see a dissipation in terms of a zero rates in the United States, negative rates around the rest of the world. But the clients are literally, I get the sense, chomping at the bit to engage. Now, we can argue whether it's fear of missing out. We can debate whether, oh, I missed the rally, should I do anything more? But what if there really is a Moderna breakthrough? What if there really is an AstraZeneca breakthrough? There's no doubt about it. The clients at Julius Baer have shown a propensity to trade. This is the best first half numbers on record that they have delivered. Yes, they're bringing in more money in Hong Kong and Japan. In Latin America, this is where the regulator berated Julius Baer a couple of times in terms of governance. That's holding, some people would say in the market, Reichenbacher back from doing a big transformational deal. I asked him, was he boxed in? He said no. He was very recalcitrant in terms of committing to onshoring in China. But I think if this is a curtain raiser to risk appetite, if this is a curtain raiser to wealth management, then you can get the sense that the rich, the ultra high net worth, and the extremely wealthy individuals, if this is what they're doing at Julius Baer, what does that mean for tomorrow and the rest of the week? So, Francine, I would say overall, the momentum from the clients has continued, not just in March and April, but the clients are continuing to be dynamic. A new CEO, a new set of ambitions. Yes, there's cost cuts, but this is a man who's obviously comfortably in that seat. He's got a nice set of numbers. Fran, good morning.
Good morning, Manus. It's so nice to see you on Bloomberg Surveillance. Manus Cranny there for us in Zurich. Now, the euro strengthening to a 4-month high. This all has to do with what's going on in Europe. European bond spreads are actually narrowing after EU leaders seem to be making progress in negotiating this stimulus package. European shares erased losses. Now, Bloomberg Surveillance continues in the next hour. Tom Keene joins me out of New York. And then tonight on Leadership Live, David Rubenstein speaks with the Alibaba president, Mike Evans. Don't miss that. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Hardline view, Europe's so-called frugal four are said to be ready to accept doling out 390 billion euros in grants as recovery fund talks stretch into a 4th day. Julius Baer kicks off European bank earnings with a record first-half profit. The bank's chief executive tells Manus Cranny continued volatility will boost trading. And the pandemic continues to spread in the U.S. Florida's infection rate surges, and L.A. is on the verge of another shutdown. A medical journal is due to publish more information on Oxford's vaccine trial. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacko in London, Tom Keene in New York. Tom, we have a number of things that we need to talk about. Good morning to you. I've missed you, Tom, last week. I don't know, it's nice to have you back in the studio as well.
You missed me last week.
is definitely on this EU summit 4-day. I mean, a marathon. I know we've always had marathon EU summits, but this was over 4 days. I was following it pretty closely on various WhatsApp groups of prime ministers and things like that, how they brief reporters, and it's been brutal negotiations.
Brutal is the right word. Francine, there was one photo I saw around that table, and I know you were following out on your Instagram week, and that was Mr. Rutte looking just exhausted. I mean, there's no other way to put it. For those of you that haven't followed this soap opera, it's still not over. We'll have coverage all through the morning. Francine, the news flow on this Monday is deceptive. It's extraordinary. Out of China, the virus, particularly in America, and then this European Donnybrook. It's amazing. And then the market reaction.
Yeah, it's quite a lot for a mid-July market day. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom, the European Union may be on the verge of a deal over that massive stimulus package. The Netherlands, Austria, Denmark and Sweden have been holding up negotiations. Now they appear to be ready to agree that $450 billion of the fund would be made available as grants, with the rest coming as low-interest loans. The emergency stimulus package could be worth about $860 billion. Brexit negotiators are in a tense standoff, and that's dashed hopes of a swift deal. Informal meetings between the European Union and the UK have failed to make progress since last month. The latest round of talks begins today in London. British negotiators say the EU's concessions aren't enough. The EU says its attempts to compromise aren't being reciprocated. One Democratic representative calls Florida's coronavirus outbreak out of control. Donna Shalala told ABC there should be a lockdown of the entire state. Meanwhile, the mayor of Los Angeles and his city is on the brink of new restrictions because of the increase in virus cases. These comments suggest that months of trade-offs between health and the economy are far from over. And President Trump is again questioning Joe Biden's competence. The president told Fox News that if Biden had to sit through a tough interview, quote, he'll be on the ground crying for mommy. He made the remarks as 2 new polls showed that the Democratic candidate continues to lead the race. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Let me get the data right now. Equities, bonds, currencies, commodities. You got to go right to the bond market, the litmus paper off the EU meetings, and it's what not occurring. Yes, the euro stronger, a 114.59 gets your intention, the enthusiasm there, but the bond market in Europe really hasn't moved all that much, and that'll be critical to watch up to what our New York 10 a.m., Brussels 4 p.m. meetings. Francine, I'll be watching that timing and the reaction in the bond market quite closely.
Yeah, Tom, you're absolutely right that if you look at European bond spreads, they're actually narrowing after leaders made progress in negotiating this historic stimulus package. If you look at euro, it did strengthen to a 4-month high. There are a couple of interesting notes. I know George Saravelos, Tom, published something earlier this morning. I know we're both, fans of what he says, and he says, the market from this point may actually move on quite quickly. I'm also looking at, so euro dollar 114, you can see 58, and then European stocks up a little bit. So negotiations over the EU's virus recovery fund made a breakthrough after days of deadlock. Leaders of the so-called frugal 4 countries signal they would be ready to accept some kind of compromise. So joining us now is Christian Keller, Barclays Head of Economics Research. Christian, it's been a difficult summit. Negotiations were very difficult amongst EU leaders. The market is now pricing in a deal. A, is the deal enough to deal with the economic catastrophe in certain countries? And 2, what does it mean for, for the recovery plan going forward?
But first of all, I think, this is still a success. We're going to the 4th day, and you described the brutality of the meetings, if you want to call it that way. But, this is something quite historic, whether it is 500 or in the end slightly less than 400 billion. It is nevertheless a recovery fund whereby Europe will be issuing European debt backed by the community and will hand that out to a large part as grants to countries that are most crisis-stricken. Now, whether it will be enough, well, it will not prevent this going to be a very, very deep recession this year, but I think it will set the conditions for a potential recovery, a successful recovery in coming years. I think this is what is crucial here, and I think markets are pricing, not necessarily the exact size of the fund, but the signal Europe is giving here with this summit.
Christian, if we don't get it, I mean, it's not 100% a done deal, right? Does it make a difference if it's postponed, if they don't actually lock it down today, and if it's done in a week? Is this about symbolism?
It is always in part of symbolism, and I just said it is about this, so it would be, it would not be correct for me then to say it doesn't matter if it's a week later. I do think it is important that it happens, before August, so in the span of the next 2 weeks. And if there is a postponement from this week with a lot of acrimony, that could take away from it. So ideally they do get a deal done by today. If they go out and say, look, we couldn't really finalize things, we come back for technicalities a week later, that's fine. If we end the thing tonight in a big bust where several of the participants go out and speak very angrily about the others, that will be a negative, but I don't think that will happen.
Christian, good morning. Tom Keene in New York. I'm absolutely fascinated in my reading over the weekend on this, the internal politics of each leader. And I'd like to focus on what I perceive as the desperation of Mr. Rutte as he looks at the Netherlands coalition government. Is he playing to the home audience, or is he actually trying to do economic diplomacy here?
Well, I think a bit of both. I mean, he is in a particular precarious situation given his basically having only half in his party, having only half of the vote. So, he is reliant in his coalition to opposition votes. Nevertheless, I think there is a debate to have, and that's being led by Mr. Rutte. But I think there are others, not only among the Frugal Four, but probably even in the German government, who think it's a useful debate to have about what is the accountability? How do we spend the money? The worst maybe could be for Europe to spend 400 billion, and by the end of the 4 years that they are gone, and you may not have the results you wish for. So I think it's with all the acrimony that comes out and the this kind of diplomacy that we're used to in Europe, I think it's actually useful debate, and conditionality is not necessarily a wrong thing, and that is, by the way, even seen by many Italian economists that way.
Mm-hmm. How great is the divide between the continent and the new members towards Eastern Europe? There's so many memories there, back to the Iron Curtain, back to World War II. Mr. Orban brought this up of Hungary, no question about it, over the weekend. How great is that distance to Warsaw, to Budapest?
Yeah, that's an entire new element. You thought it was a north-south thing,
exactly.
And now we have, of course, that simmering east-west, if it's simplified, but I guess you could call it that way, given the countries you just mentioned. It's mainly really Hungary who's leading here. And look, if you're cynical, and that's what I hear from some of the diplomats, they say, they are making the point in the end to be bought off, and ultimately they will be agreeing, but they will want somewhat more of the package. But that cannot really denies the fact that there are increasingly these differences in views, fundamental views about what Europe stands for, how liberal it should be between Western countries like Germany, France, Italy, etc., and Hungary, the current governments, one has to say, in Hungary and Poland, right? This is not something that's necessarily intrinsic in these countries, but it comes with governments that come and go.
Christian, what does this all mean for euro? Is all the positive news already priced in? What happens from now until the end of the year?
Well, currency is always has two sides, and I think what we could see here is optimism on the euro and also some pessimism, and I think you discussed this probably earlier also with regard to the US. So uncertainty in the US, more optimism on Europe, possibly a deal. I think it should lead us to a stronger euro, and that is aided on the weaker dollar side. It should lead us higher in euro dollar.
Thank you so much. Christian Keller there of Barclays stays with us now. Coming up in the next hour, Chetan Ayya. He's Morgan Stanley chief economist and global head of economics. That interview with Chetan at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
sometimes you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Surveillance. Good morning, everyone. Francine Lacroix in London. I'm Tom Keene in New York. Here's where we are. Sleepy Monday in the summer? Not. The markets? Yeah, they're sleepy. Full disclosure, we really haven't seen much movement. Green and red on the U.S. screen on futures. The VIX 26.17. But the news on politics and international relations, the ramifications of that into August, really extraordinary. Christian Keller with us with Barclays. And Christian, I want to go to where we are in the U.S., which is a furlough to layoff, and the gaming of how businesses are going to adjust and the firings to come. Does Europe have the same challenge right now where there's that sense of pending layoffs or right-sizing by businesses?
I think it is, to some extent, a global phenomenon. And, we had different responses, given, you have different labor market institutions, different employment schemes, etc. You had the Payroll Support Act in the U.S., and you had in Germany the short work scheme for workers, which is well established, and that creates some differences in how high unemployment rate goes up, etc. But all the countries face the problem that after initially being very generous, keeping people on the payroll or supporting them generously when they were unemployed, this can come to an end, and it's very difficult to see how this will be prolonged for a very long period. And at the same time, it seems there will be structural changes to the economy where a lot of these workers may not be able to go back to their old jobs, in particular in many of the service sectors that may be permanently damaged from the corona.
Bring that over to price change and also through inflation. Is your general tone forward a Europe of disinflation, or can there be bouts of deflation, which is indicated by the negative rates?
Well, there's always the risk of, a deflationary scenario when you have this type of economic downturn plus the high employment or unemployment better. I would say, though, that if you look at the policy response, and that's on the fiscal side, but in particular on the monetary side, a lot of that tail risk of a deflationary scenario is taken out. The question is then, is it enough to really go back to a inflationary scenario whereby we are getting close to targets in a few years, meaning 2%? I think that jury is still out. But, the deflationary risk, I think, has been addressed by very, very, large policy responses.
How much more policy space is there to do more, Christian, if needed? And, is a policy response at the moment just appropriate because we think that there's going to be a gradual recovery, or certainly that we don't go back into lockdown? But how do you view it? If we're on and off lockdown for the next 18 months, what does that mean for the economy?
Yeah, that's correct. I think most of the forecasts are based on the assumption that we will have a recovery from here, and it may be long, it may be a U, not a V shape, but we do think that things are getting better from here. A scenario whereby we have a proper, let's call it a V, where we go back into recession and possibly would have to really go back to lockdowns, close as bad as the ones we had in March, April. I think that would raise very difficult questions, in particular on the fiscal side. Now, we talked about inflation earlier. As long as inflation is very weak, I would assume that central banks just continue to really support fiscal policy, meaning they will continue to load the debt that is being issued by fiscal agents on their balance sheet. And if there's no inflation, it does seem that that is something they can do for quite some time. So I think that combination of fiscal largesse combined with a very aggressive QE would remain the policy response if we had a second wave.
What kind of policy response are we going to see from PBOC or from Chinese authorities, Christian? I mean, the rally 2 weeks ago that then was, suddenly stopped, I guess is not insignificant. Does it give us more of a sense of things to come?
Well, I think if you talk about the Chinese stock market, that's always something quite peculiar. It's very much driven by retail sentiment, and that is at times, being boosted or being taken back a bit through state media. I think it was interesting that on the day we saw very large declines in the Chinese stock market, we actually saw much above consensus growth print for the second quarter. So, it doesn't really seem very much related. It is much more of a matter of moods. But, so far, if I look at the situation in China, it does seem that their policy response, even though it's somewhat more muted maybe compared to 2008-9, is being quite effective. The Chinese economy is recovering relatively well. And, it's a mix of fiscal and some monetary easing. Obviously not the QE that we see in the West, but I think they have more room on the fiscal side. And, in terms of the policy response, I think China has room to support the economy if they need to.
Christian Keller, thank you so much with Barclays. A really nice update there here in the midst of this fractious EU summit as well. We're going to have a lot more conversation on this, particularly driving in 10 a.m. New York time, where I guess they get back together. Maybe we'll get a photo op out of it. Who knows? No photo op at 7:30. David Malpass will join us to the World Bank. This is really interesting. Where is the World Bank's place within this horrific pandemic? We'll touch on that with Mr. Malpass. Please stay with us from London. From New York this Monday, Bloomberg Surveillance. Good morning.
Opportunity knocks at the door. Don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This was that crisis, and that's what we delivered with a 15+% ROE. So I think it validates the strategy, but it's our strategy. It's not for everybody. This is what we chose. We didn't want to be credit heavy. We want to be flow-based, fee-based, asset-based.
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Tom, Julius Baer kicking off European bank earnings with a record first-half profit. Our Bloomberg Daybreak anchor, Manus Krani, spoke to the Swiss bank's chief executive, Philippe Reichenbacher, earlier.
Clients have been extremely active in the market, but not just during the peak period of March and April. We've actually seen continued client activity throughout the entire half year, with a bit of on and off. But coming out of the first into the second half year, I still sense there is a lot of dynamic as clients are looking what are the markets doing, how are now those recovery patterns happening in the different countries. And it's going to be interesting moving forward.
When I look at the Treasury book, and that's how you just chatted me before you came in and said, look at the FX, the derivatives and the metals book, that's $500 million Swiss francs. My question is that hedging or is that actual active client engagement? How would you define that kind of number in the report?
Obviously, in our balance sheet, there are two kind of activities. On the one side, there's the Treasury book, and the Treasury book has been revalued with the huge change in dollar interest rates throughout the first half year. But obviously, on the other side, on the trading side, we've been benefiting from very high client activity throughout that period, which is reflected in the numbers.
And the guidance going into the second half of the year, are you going to need exceptional volatility again to deliver these kind of numbers and margins?
I think obviously volatility helps, and this is a business. We are a business model that can capitalize on volatility, as we have proven. And I think we're going to have it. We're going to have it obviously from a market perspective. There's going to be stimulus in the market. There's going to be political uncertainty. So I think there are a few ingredients in the second half year that can truly drive volatility.
Is it the U.S. election that's perhaps the biggest risk for you?
That's obviously one of the risks, but not the only one.
The other dynamic is this: we look at this amazing recovery in equities, the change in credit spreads. Do you think there's a certain amount of detachment from our markets from reality?
That's very hard to comment. I think obviously, in reality, in the real economy, the impact of the crisis is going to play out over a longer period of time. In the first half of this year.
Do you think we're underestimating the length of time this is going to work out over?
Maybe, but I think what's very hard to predict is really the recovery patterns. And I think those countries that have taken measures early and in a thorough way and in a deep way, they will see faster recoveries, whereas other countries will be in for a much longer game.
The biggest risk going into the second half of the year, what do you think it comes from? Negative rates, politics, China? What is it that goes through your mind?
I do think we're going to see uncertainty, and I think the uncertainty lies in the speed and in the depth of the recovery patterns. Where does it happen and when? And I think that uncertainty is obviously a big risk, and then a bit of overlay obviously from what's happening politically. But I do think we continue in a volatile situation, and it's good for those players who can capitalize on volatility.
Well, that was the Julius Baer, chief executive, speaking to our Manus Krani. Now, we also understand that billionaire Jack Ma's Ant Group is kicking off a much-anticipated initial public offering with plans to list simultaneously, we understand, in Hong Kong and China's new tech bourse in Shanghai. We understand that the valuation could be of at least $200 billion. Now, today on Leadership Live with David Rubenstein, the Carlyle co-founder is speaking with the Alibaba president, Mike Evans, about how the Chinese e-commerce giant is navigating the COVID-19 crisis and rising U.S.-China tensions. That interview, 4:30 p.m. in New York, 9:30 p.m. in London, right here on Bloomberg.
greatest fear is if we continue with a system that allows pharmaceutical companies all the monopoly control over the medical solutions to this pandemic, that we're going to see a situation of a bidding war, essentially, between rich countries.
I can't block the U.S. from doing deals. Of course, I would imagine many allies would be quite unhappy at the time if they're dying, their populations are infected, and that's not being shared. So what we can do is create legal agreements with companies and try to move forward. If at the end of the day, those legal agreements are broken or countries seize assets or don't allow provision of vaccines, that's a problem.
We'll have to find a solution because some of these arrangements have been made. And I think we have to be pragmatic about it. I think we also have to stick to our guns.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Many of those cases are young people that would heal in a day. They have the sniffles, and we put it down as a test. Many of them, don't forget, I guess it's like 99.7%. People are going to get better, and in many cases, they're going to get better very quickly.
For our global audience, an extraordinary Sunday for the president and for this nation. That was with Chris Wallace of Fox News. It was a contentious interview by all opinion and a lot of fact-checking of the president and, of course, his posturing about Mr. Biden as we stagger towards an election. Right now, with perspective on this, is a gentleman with just a wonderful resume and CV of Princeton, of the University of Texas at Austin. Peter Trubowitz is with LSE and is professor within their prestigious International Relations Department. We're thrilled that Professor Trubowitz could join us this morning. Professor, do you buy the polls? I mean, we all remember that evening in 2016 where the polls didn't work. Do you buy the polls that show the Vice President, Mr. Biden, far ahead?
Yes, I think if the election were held today, Biden would win, and probably the Republicans would lose the Senate. But I expect this to tighten between now and November, and I think it's fair to say that these polls have to be taken with a grain of salt. That is to say that there are a lot of Trump voters who are people who will vote for Trump who are not saying this to the pollsters. It could be as much as 4 or 5% of the vote. So what you're seeing in the polls, but 15% is a pretty big margin. That was what was in the Washington Post NBC poll that was released yesterday.
There's a swirl this weekend on voting rights, from the legacy of John Lewis to the idea of the president questioning the quality of the voting in November. Should our viewers and listeners worldwide prepare themselves for a contentious counting of the votes in November?
Yes, I think it really depends, Tom, on how close it is. If it turns out that Trump is able to close the gap, and we can talk about how he might do that, and it gets close, then I think there will be disputes, especially if it's closed in battleground states over these absentee ballots. And you heard the president yesterday on this very topic in that Fox News interview about how he has serious questions about the integrity of the absentee ballots, and I expect that if it's close and that they will push on that Trump's team, and it comes as no surprise that Biden is lawyering up. He's got 600 lawyers in the stable, partly to deal with this issue if it comes up.
Okay, but how, I mean, apart from this, Peter, and good morning from London, how does President Trump try and get it back to win in November?
Well, I think he's got like two ways to go here. One is to blame everyone and anyone for the pandemic, and you can bet your bottom dollar that China will be singled out. He's already moving on this front. Why? Because in many voters' minds, China is already seen as an economic threat to American jobs, and since the pandemic, their views on China have become even more negative. There's a Pew poll that's out, pretty recent poll that shows that 2/3 of Americans right now hold a negative view of China. The other side of this, though, is I think that you're going to hear a lot more chatter from the president about a vaccine. And the vaccine may be the president's October surprise. Even if a vaccine doesn't materialize in time for the election, I frankly expect to hear a lot about hope is just around the corner as we get closer to the election day.
But Peter, unless the number of deaths goes down, unless the number of infection goes down, it doesn't matter who you blame. Even if President Trump says, well, this is all China's fault, the handling of the crisis at home is on him.
Well, I think that I don't disagree with that, and that is Biden's strongest play. I mean, at the end of the day, the reason that Trump would be trying to blame China or somebody else, Dr. Fauci, for the pandemic, for what's happening in the United States, is because this has boiled down to a question of competency and a question about what Trump doesn't want. What any sitting president doesn't want who's up for re-election is for the election to be a referendum on them. And that's what Biden is going to try to do. It's the smart move. It's because it's where Trump is weak. I mentioned that Washington Post NBC poll. The thing that really caught my eye in that poll was what's happening to Trump in rural America, his base. He had a commanding 47% lead just a couple of months ago. That has been trimmed down to 18 points, and you don't have to be a rocket scientist to understand why. Yeah. Basically, these voters are Trump's voters, and they're being hit by the pandemic right now. That's what's driving this. And that's the problem that he faces. It is a question about his competence, and so he has to change the conversation.
Professor, those people don't care maybe about international relations theories, but there's a lot of people that think about the American theory forward. The London School of Economics, you have Spiros Economides and others looking at Europe, IR, Asia, IR. What is your view of what the theory of international relations for America will be? Can we find a new Washington consensus?
Wow, that's a big question. Not easily. So the problem is that the United States has been retreating from the liberal international order. Frankly, this did not begin under Donald Trump. It started earlier, but it has been accelerating with the rise of kind of nationalism in the U.S., and we see a lot of the same thing over on this side of the pond. It is going to take some real, new, fresh thinking in the United States. The possibility, and in Europe, the possibility is that the pandemic could make things worse by fueling nationalism. On the other hand, it could force people to start to rethink and to think more clearly about how the international system needs to be structured to serve people's interests. So, I'm hopeful that there'll be some rethinking.
Professor, this has been wonderful. We look forward to seeing you at our Queen Victoria Street studios in London, maybe a pandemic removed. Peter Cherwowitz with the London School of Economics. And now in New York City with our First Word News, here's Radhika Gupta.
Thanks, Tom. In New Jersey, a gunman reportedly dressed as a FedEx driver shot and killed the son of a federal judge and wounded her husband. The judge, Esther Salas, was in the house at the time but was not injured. Law enforcement says it doesn't know of any specific threats against her. Last week, Salas was assigned to a lawsuit against Deutsche Bank linked to disgraced financier Jeffrey Epstein. The 4 countries that have been holding up a European Union rescue package are now set to sign off on a key proposal. The Netherlands, Austria, Denmark and Sweden are satisfied with $450 billion of the fund being made available as grants. The rest will be in form of low-interest loans. The EU leaders will meet again today to work out the remaining issues. President Trump is playing down a resurgence of coronavirus cases in the U.S. He told Fox News that many people experience nothing more than sniffles. The president called the U.S. response to the outbreak the envy of the world, and he called the infectious diseases chief, Anthony Fauci, alarmist. The White House and Senate Majority Leader Mitch McConnell begin talks today on a new coronavirus stimulus package. Bloomberg's learned that the administration is balking at $25 billion that Republican lawmakers want for testing and contact tracing. McConnell has been preparing to unveil a Republican-only bill this week before he negotiates with the Dems. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Of great interest into the November elections are those Democrats that are, well, suburban, those Democrats that are maybe away from the progressive, the more liberal wing. We're going to do that, drive a conversation forward. Well, Don Beyer, he's a Democrat from, well, some would say the People's Republic of Arlington and Falls Church, just outside Washington. We speak with the ambassador here in the 6 o'clock hour. This is Bloomberg.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
2% inflation goal is symmetric, which means we should overshoot it. We're having a difficult time doing that, like all developed economies. I'm supportive of the idea of letting inflation get above 2% before we take any action with respect to the Fed funds rate.
This
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, Tom, shares of AstraZeneca are rising today. The company is set to release a study on its latest COVID-19 vaccine developed with the University of Oxford, with early reports indicating that positive results may be coming. Well, joining us now is Sam Fazeli of Bloomberg Intelligence. Sam, you have, like a few people, a lot of insight into what these reports, or actually what these trials actually mean. What are we expecting from the Oxford trial? Is it positive, but would it be conclusive, or is it really, baby steps?
Morning, Francine. So I think your baby steps is the way to put it. This is a early stage trial again. These are designed to be testing things in healthy people with very few comorbidities or none at all. So really it doesn't tell you how it's going to work in the broader population, but it's going to give us an idea of how well it's worked in this early phase 1 trial. So waiting and waiting and waiting. We don't know when that data is coming.
So I know I spoke to you in the last hour, and you reminded me to talk about CINAR again. How many trials, and how different are these trials, actually? What did we learn from CINAR again today?
Yeah, so these guys are more focused on therapy as opposed to prevention. So obviously, AstraZeneca, we're waiting for the vaccine news. Here we have what was a really tiny UK biotech company, which is rare to get good positive news out of the UK biotech sector. At the end of 2019, this had a 4 million enterprise value. So they've just shown in a small trial again, but pretty decent data, that they can reduce the risk of patients going from being on oxygen to being on a ventilator. This is now the third therapy. So remdesivir from Gilead, dexamethasone, which is generic, and this therapy from these guys that in a small trial has shown potential.
Sam, this is a critical point which came up this weekend, folks, at least 4 times, maybe 5 times. Are we trying to find a vaccine to help with therapy? Are we trying to find a more traditional vaccine that is a quote-unquote cure for the virus?
Tom, I don't know who you socialize with, but this is an incredibly good question. We will not know the answer to that until a long way into the development of these products. Are they going to be able to be vaccines like a measles vaccine, which you don't even get the infection? It just clears the virus, kills the virus at point of entry, etc. Or are we going to get something that allows you to get an infection, or still leaves you exposed to the infection, but prevents the development of the disease? Very tough to tell. I think at the moment, the signs from animal studies has been that they are good at preventing the disease, but you really need to know data from humans.
I mean, Sam, this is really crucial. You go from Salk 1955 to Sabin 1961, and I have the clearest memory, folks, of mothers in tears in school as they put the little pink drops in our mouth. I mean, are we going to get that drama, Sam?
It looks like it, Tom. If the mask story is anything to go by, you're going to get people who worry about it, and you're going to get people who don't worry about it. But I'm pretty hopeful that this ends up being a vaccine that, at the very least, turns the COVID-19 infection into a less serious of a problem. I mean, I'm not going to call it a common cold, because you really don't know until you see the data. But certainly less risky.
Well said. We'll let the president talk about sniffles. Sam Fazeli, just excellent. Thank you so much. With Bloomberg Intelligence on medicine. Truly expert discussion on this horrific pandemic. We've been doing that with the Johns Hopkins University. We start strong on Monday. An update from Joshua Sharfstein. Look for that later today. Please stay with us from London, from New York. Future slightly negative. We await news from the EU summit. This is Bloomberg.
downtown Mexico City, where there's quite a lot more movement than before because the downtown is beginning to reopen. Some businesses are still shut down and others are open, so they're alternating days of the week in which they can open. There are a lot of people wearing masks, almost everyone is. The city also tried implementing a rule that would limit the flow of people to downtown. Mexicans are being very cautious.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Ritika Gupta. Let's get the Bloomberg Business Flash. Billionaire Jack Ma's Ant Group is kicking off its much-anticipated IPO. The parent of China's largest mobile payments company will list simultaneously in Hong Kong and Shanghai. This could be one of the largest IPOs in years. Ant was valued at $150 billion in its last funding round. Citigroup says it's only a matter of time before gold hits a record in US dollars. According to a new outlook from the bank, there's a 30% chance gold could go over $2,000 an ounce in the next 3 to 5 months. Spot gold set its record of $1,921 in 2011. Shares of Apple AirPods maker Lookshare jumped today. The company has clinched a deal to become the first mainland Chinese company to assemble the iPhone. Lookshare agreed to pay $470 million for Wistron's iPhone production in China. The company will join Foxconn and just 2 others who make iPhones. And that's Bloomberg Business Flash. Tom, Francine.
Thank you so much, Ritika. Now, amid an unprecedented decline in air travel, the industry is dealing with not just COVID-19, but with Brexit. This comes as the Farnborough International Air Show reinvents itself as an all-digital event this year. Well, joining us now is Paul Everett, ADS Chief Executive. ADS is the main UK trade body for aerospace, defence and space. So thank you so much for joining us, Paul. Paul, first of all, before we get on to aerospace and defence, overall, how are we going to travel differently? We have our great opinion writer, David Fickling, that writes a Bloomberg opinion story this morning saying, look, the virus will make air travel even worse from now. Fewer flights, more expensive.
Well, I mean, we're going to have a difficult period. Fortunately, we are now beginning to see, certainly in the UK and Europe, a slow pickup in regular flights, and at the moment, relatively small numbers of people flying. Clearly, there's still a level of nervousness, and I guess we're all looking slightly anxiously over the next 2 or 3 months to see exactly how things play out. But I think once we get into next year, I think we're reasonably confident we'll see passenger numbers beginning to grow, confidence begin to return, and whilst it's still going to be, excuse the pun, a long haul, I think the underpinning fundamentals for growth in air travel remain strong. A growing and increasingly wealthy middle class and a desire for international travel and trade.
Paul, when you look at aerospace and the aerospace sector, it seems that the UK has been hit harder by job losses than other parts in Europe. Does this also have to do with Brexit? I mean, we're in an uncertain situation because of COVID-19, and then on top of that, we don't exactly know how these Brexit negotiations will end up.
So there's no doubt that the future relationship with the EU is a bit of a challenge, and clearly for us as an industry, Europe-wide, we want to see a relationship, we want to see deals struck at the earliest point. Clearly, we're going to struggle with a degree of uncertainty until that's done. I think on the broader note about whether the UK has fared better or worse, I think we need just to remember that in a number of countries, particularly in France and Germany, there are well-established kind of, I suppose, protocols or social mechanisms that kick in when significant drops in production happen. So in Germany, they have Kurzarbeit, a similar type of scheme in France. In the UK, we haven't traditionally had those schemes. And whilst the UK government has put in place its job retention scheme, which is a furlough scheme, which runs through till the end of October, we would say the UK has always had a more dynamic and more flexible labour market. And, in good times, that works very well for us. Sometimes when times are difficult, not so good. But on balance, I think we're in a reasonably good place.
Well, Paul, that's the heart of the matter. Do you just assume there'll be another bailout of aviation, not so much in the United Kingdom, but a bailout worldwide?
Well, I think we've already seen very significant investment in the US and in France and Germany, a number of other states. Particularly, I mean, they focused on what we term their national carriers. So, whether it's Air, Lufthansa or others. In the UK, we have long had a more open and, I guess, competitive marketplace. So both, EasyJet, Ryanair, British Airways, and Virgin, amongst a range of others. So, when times are good, that competition means higher quality, cheaper fares for the travelling public. We don't have an easy mechanism for significant dedicated government assistance. There are measures in place.
My question is, though, is that going to change? I mean, it's all great talk and that, but if you stretch to October or past October with a lack of profitability, maybe they put some planes in the air, maybe they get some revenue, but they get no profitability. Are they going to be more Lufthansa-like? Are they going to be more Air France-like?
Well, I think the challenge for the UK and the threat for the UK is with competition from those other airlines, there is definitely a competition around the sort of hubbing of passengers. So, we'd already seen Charles de Gaulle, kind of airports trying to attract in passenger traffic from the UK for longer haul connectivity. And I think if the airlines are, if our airlines based in the UK are less financially robust as we emerge from the crisis, then clearly that will put more strain on their business model. For an aerospace industry, we need well-funded and profitable airlines in order for them to invest in the products that we need to be developing.
Thank you so much for joining us, Paul Everett there, the Chief Executive Officer of ADS. Now, this is what the market is looking at. They're looking at EU leaders meeting again today around 4 p.m. local time. That will give us a good indication on whether they'll go for this recovery fund and how much the amount will be agreed on. Euro climbing on the back of it because there is hope in the markets that leaders have made progress in negotiating this historic stimulus package. If you look at European shares, they actually erased some of the losses. Coming up in the next hour, David Pearl, Epoch Investment Partners, Co-Chief Investment Manager and Portfolio Manager. We'll talk to him about gold. We'll talk to him about treasuries. And, of course, we'll look at bond yields. Italy's 10-year bond yield spread over Germany, a key gauge of risk, falling to the lowest level since March. This is Bloomberg.